Hi, Ramesh.
Hi, hi Mudit.
Hi.
Hello, everyone. It's a great pleasure to welcome you all to a webinar today to discuss the financing trends in rooftop C&I segment in India. The event is organized by Institute of Energy Economics and Financial Analysis, that is IEEFA, and GMK Research. IEEFA is a leading think tank that analyzes issues related to energy markets, trends, and policies. And GMK Research is a boutique research and consulting firm that focuses on renewables and electric mobility segment. Quickly on the format of the webinar. The webinar will consist of interactive discussion with our eminent speakers today. At the end, we will have 15 minutes for question and answer session. Participants are welcome to submit their questions in the Q&A box at the bottom of the webinar window. And I request my panelists also for today's session, if they can help and if they can answer in parallel to some of these live questions, that will be good for the audience. The agenda for today's discussion is to understand the equity investment trends in rooftop C&I segment in India, to dwell on the MSME financing trends, how to tap new opportunities in this segment, what are the challenges and risks that needs to be addressed, and success cases. And to take on the discussions today, we have a very interesting set of industry experts with us today. A quick intro of our experts. We have Ms. Vibhuti Garg, Energy Economist from IEEFA. We have Mr. Mudit, Jain, Head of Research from Tata Cleantech. We have Ms. Jignasa Visaria, Head Renewable Capital from Fourth Partner Energy. We have Mr. N.P. Ramesh, COO ORB Energy. And we have Mr. Ashutosh Puntambekar, Head Rooftop Solar Finance from Electronica Finance Limited. Thank you all to be part of this discussion today. Without taking much time, we would like to start with Vibhuti, you first to share some key insights captured in our report published yesterday on this topic and set the context for today's discussion. Over to you, Vibhuti.
Thanks, Jyoti. Are my slides visible?
Yes.
Great. So good afternoon, everyone. Today, I will be presenting the broad trends in the financing space in the solar rooftop C&I segment in India. The idea is just to present the broad overview and to then hear from the knowledge experts and the stalwarts, who are leaders in this segment. And we do have a presence from some of these companies that I'll be talking about during my next few slides. So just to quickly give an overview, C&I sector, as we all know, accounts for around 75% of the total rooftop solar installations in India. And accessible financing is kind of a prerequisite to drive growth in the rooftop commercial as well as industrial solar market in India. The rooftop solar installations witnessed a slight decrease, which was quite expected in the year 2020 due to COVID-related disruptions, which was about 13%. However, at the same time, it kind of persuaded a lot of customers who felt the need to transition and deploy solar rooftop on account of the increasing need to optimize their costs. So as a result, in 2021, as you can see on the right side of the graph, it is expected that there will be around 2.5 gigawatt of installation, reflecting a 37% increase. The uptake can be even higher, if the policy environment is conducive. So for a strong growth in solar rooftop, it is essential that there is policy certainty. Let's look at the investments now. Since 2015, project developers catering to the C&I sector in India have raised more than $2 billion US, out of which 48% has been the equity and 29% was raised through debt. The remaining funds, as you can see, especially in 2019, were as a result of acquisitions, of which the biggest chunk is held by the Petronas, acquisition of Amplus in April 2019. So debt, equity, as well as concessional credit lines are the four major primary sources of funding in the C&I solar rooftop space. If you look at now again 2021 has now been a very exciting year, especially for the rooftop solar. And investment in the first 8 months of 2021 have seen a sudden surge compared to the previous 2 years. So the surge was mainly driven by substantial equity investments in Fourth Partner Energy in June 2021, and then also Cleantech Solar in August 2021. Interestingly, majority of investments have come from foreign entities, and the investments have been limited to major players like Fourth Partner, Amplex, CleanMix, Cleantech, who have a sizable megawatt portfolio in the C&I space with relatively very high experience. If you look at the equity investments now, and the players who kind of this graph shows which were the different players who were provided equity investment. And if you look at, again, the equity investment, as I just said, almost all the equity investments had come, approximately 99% of the equity investments came from foreign entities. This is primarily because, Indian solar market is viewed as high growth potential market by international investors. It further allows in India, to own as much as 100% stake in such projects, which is not possible in other countries. And lastly, most of these companies are bound by the net zero emission targets or Paris Agreement targets, and which has led to huge interest from foreign players to invest in India and also elsewhere. Now, which players raise equity investments? So equity investments in the segment are concentrated by the 4 major players, which I just mentioned: CleanMix, Fourth Partner, Amplex, also being one of them, and Cleantech as well. These players have higher experience in the Indian solar market and have sizable portfolios, have bankable track records, and the distribution of portfolios across different states in India, which kind of reduces the risk for investors. So on account of all these positive things which they have, a lot of investments are kind of directed towards these big players only. 2021 has been a good year for rooftop solar installations, with more than 45% of the total equity investment being raised in 2021 alone. Another important source has been acquisition. I mentioned the big ones being by the acquisition of Amplex. And then what also was a bit striking was that key players such as Statkraft, Sterling and Wilson, Azure Power, also exited the rooftop solar space as part of their portfolio reduction. Renew Power is further in talks with Amplex Power to sell its rooftop business as well. The biggest acquisition was by Radiance, which was a bit of a kind of I wouldn't say shock, but a little bit outside their own business. So they did acquire all of Azure Power, 152 megawatt of rooftop solar assets, as well as Origin Renewables Private Limited assets were also acquired by Radiance Renewable Energy. In terms of now coming to the key lenders of debt, there are a number of financing options available, which includes concessional credit line. Then we also have big NBFCs, EPC players also offering financing product options bundled with their rooftop solar products. Then we have commercial banks. In addition, we do also have regional Sahkari banks that also lend money for these projects at very attractive interest rates. Debt can be classified as long-term as short-term debt, and these are a few of the players providing long-term and short-term loans. We have World Bank, SBI, Tata Cleantech, IREDA kind of providing long-term financing, and then we have other players like SIDBI, ORB Energy, Electronica Finance. We do have presence from them today, and who have been lending short-term loans. And if we compare long-term versus short-term loans, long-term have lower interest rates than short-term loans. Short-term loans have interest rates which can go as high as 15%. And further, long-term, in most cases, has been obtained by customers who opt for OPEX installations, and have the financial track records to minimize the default risk. Further, long-term loans are typically obtained by corporate players with credit rating of BBB plus and above. For more details on these various financing by different players, kindly look into our report. You'll get a lot more details on the loan amount, amount disbursed, eligibility criteria, capacity supported by such loans. A lot of details are provided for all these different players in our report. In terms of the players who have raised these funding through debt, we have leading Indian players such as, again, Fourth Partner, Amplus and Cleantech, raising funds by getting access to debt capital with the steady growth trend over the last few years. The graph shows which are the players and what is the kind of quantum of debt financing raised by each of these players. Now, I want to concentrate now on the MSME financing. So far, the growth has been in the rooftop solar C&I segment, been driven by largely few creditworthy organizations. The MSME sector kind of represents a future goldmine for rooftop solar adoption, considering the significant potential in electricity cost savings it can offer. So if accessible financing options are made available, growth can also be replicated even to the MSME as well, which can help the rooftop solar market expand. The market segment is still relatively untapped because of many challenges. First and foremost being lack of creditworthiness, while RBI issued guidelines to advise MSMEs to undergo credit assessment. However, majority of MSMEs still lack them. This makes banks and lending institutions reluctant to lend to MSMEs that are unable to establish their creditworthiness. Secondly, there is reluctance from RESCOs to develop projects from MSMEs. RESCOs are reluctant to develop projects due to concerns about the ability to honor PPAs. Then we have long-term uncertainties. A large proportion of RESCOs are reluctant to commit to long-term projects for MSMEs due to uncertainty about the future and longevity of the business of MSME. Further, these MSME also, kind of struggle to put up collateral. Long-term uncertainties coupled with a lack of collateral and, good credit history increases banks' reluctance to lend to this segment. So sufficient collateral is often difficult for many MSMEs to provide. Then we did talk about the regulatory issues. So regulatory barriers, environment for rooftop solar has been very volatile. One of the critical challenges facing rooftop solar adoption is the uncertainty around net metering provision. We have seen in the last few months how the threshold level has been changed, which just added to the confusion and making some of the projects unviable and just halted the process to some extent. And lastly, lack of equity funding. So in order to make rooftop solar more bankable asset, more equity needs to be pumped in either through pilot projects that might increase the confidence of the investors. What can be the innovative ways to cater to this MSME segment now? Firstly, financing can be done via NBFCs dedicated specifically to MSMEs. We already have seen some traction in this space. We have Tata Power, SIDBI tie-up in January 2021 to offer easy and affordable financing. The pair have designed a unique solar financing solution for MSME customers, helping them to switch to rooftop solar without any collateral and at an interest rate of less than 10%, which is very, very lucrative. Then we also have USAID and DFC Encourage Capital fund sponsoring about $41 million loan portfolio guarantee, which started in March 2021. And they have further partnered with New York-based Encourage Capital, which is an environment-focused investment fund, and two Indian non-banking financial companies, Seekers and Electronica Finance Limited. In addition, we also have ORB Energy. The model is very, very different. They are a vertically integrated provider of solar energy solutions from providing solutions from manufacturing to sales to installation as well as finance. They have this concept of annual maintenance contract for service infrastructure that ensures, that the customers continue to receive the benefits of rooftop solar. In addition, we can also look at financing via first loss financing arrangements as well as risk absorption funds. As I did mention that MSME, being considered not so bankable sector, they would like to kind of leverage concessional debt, and through these schemes like partial risk guarantee or a risk absorption fund. The World Bank is working with the Ministry of MSME to bring in a credit guarantee mechanism catering to MSMEs that would like to reduce their long-term energy expenses by investing in, rooftop solar. Lastly, I would just end by kind of citing some of the recommendations that we have proposed in our report. First and foremost, avoid regulatory flip-flops. Regulation across states needs to be consistent and should be implemented from a long-term perspective. We need to really reflect interests of all the stakeholders and should not look at killing the sector when it starts just picking up, which has been the case so far. Secondly, we need favorable state policies as well. Having favorable state policies will lead to greater adoption. We have seen in the case of Gujarat, which provides 35% of cost of operation and maintenance, as well as few states allowing for even 100% of sanction load. So there are different ways through which states can provide a more environment that can help in boosting adoption of solar rooftop. Thirdly, it would be critical to encourage DISCOMs, who are one of the key stakeholders in this whole scheme of things, to participate in rooftop solar via the OPEX financing route. DISCOMs can offer lease or PPA services, at lower cost than the private sector because of their synergies as well as, their sales operation and having a huge, large customer database, which can really work in their favor and can help lower, customer acquisition costs for them. Another one is to explore alternate arrangements for disbursing unutilized concessional credit lines. One way could be to expedite its utilization by adding new implementing agencies or financial intermediaries. This will help to utilize the low-cost funding available to the C&I segment. I would say that size matters. So for small size rooftop projects, it is difficult to get access to affordable financing by virtue of the project sizes. So aggregation of smaller RTS projects can be done. Again, in order to make MSME projects bankable, we need more and more partial credit guarantee funds. Lastly, a streamlined loan disbursal process and improve equipment quality. This will lend more credibility to investors. I'm going to stop here. That's it from my side. Looking forward to the discussion now. Thanks, Jyoti.
Thank you, Vibhuti, for setting the context for our discussion today and talking about so many parameters for which we already have industry experts representing these companies. So I would like to get insights from Mudit. You are the most active players who's involved in financing in the rooftop C&I segment. Any insights that you wish to talk about basis your extensive experience in this segment? Over to you, Mudit.
Thank you, Jyoti. Thank you, Vibhuti, for such a brilliant presentation. I would just like to highlight a few issues, Jyoti. I mean, look, we are in the sector, as you have already highlighted in the report, for financing under our partnership with Green Climate Fund. If we look at the challenges of rooftop in general, if we compare with the utility scale projects, here, A, the cost is higher, B, the generation is lower. There are a variety of reasons why the generation is lower. But in our portfolio alone, we have seen the generation is lower by close to 15% to 35% in various states for rooftop projects. Now, because the generation is lower and the installation cost is higher, there is definitely a mismatch when it comes to the tariff. What people see for utility scale projects is these are definitely not one-to-one correlated with that of rooftop solar projects. The moment we talk about the large projects, they still are able to make some sense out of it. But as you rightly mentioned, for MSMEs, there is a definite lack of financing solutions available. Would you want me to go through the reasons why exactly are the problems which we are facing for these segments? Should I put up a slide?
Sure, Mudit, if you have something ready.
Yeah, I mean, I'll just present one slide for you, just 1 second. Let me know if the slide is visible.
Yes.
Okay, so, all right. Now, look, these are the various business segments. You have government, you have C&I, you have residential. In government, there is well thought of process for RESCO and CapEx. For RESCO, the financing is very easily available. The largest segment, though, is the C&I, where RESCO is being preferred by the players who have good credit rating. And in that segment, it's very easy to finance. CapEx, we still have some challenges. I'll tell you the reason why. In a financing solution, you have significant proportion of reputed creditworthy off-takers. They prefer OPEX model, they have higher system size, it's easier to finance, and all the system goes on. And these are the players who are able to scale up their own business shares. But the moment we talk about the CapEx, this CapEx is true for the C&I segment or for the residential segment, the system sizes reduces. Even if you talk about aggregating needs to be done by a single borrower. It can't be done by individual borrowers and then they collect together and come back, because then processing would still have to be done for each borrower. Second, for the CapEx system, you require no objection certificate from the existing lenders. Now, this no objection certificate is a very tricky subject. It takes too much time, too much effort, and ultimately makes the project really unviable to pursue, because taking this no objection certificate is a very difficult part for any of the lenders. Now coming on to the second part. In the residential, you can talk about IT system upgrades and partnerships to do it. We are already in the process of launching a product for the residential, but regarding the CapEx, this is the trouble. Of the players who have gone ahead in the CapEx system, the players who can really say them as investment grade entities, they are barely 1/3. Balance 2/3 are those which are below BB plus or unrated. Let's look at the financing options. The moment you talk about financing this below investment grade rating entities, your financing cost goes up. You will require some sort of solution to go through with it. You have shown in your presentation that the cost of short-term borrowing is higher as compared to the long-term borrowing. That's antithesis to itself. It shouldn't be the case. It should be the other way around. The real reason why the short-term debt is higher is because only these are the entities which otherwise cannot get loan are the ones who have to go for it and hence have to shell out higher for taking out that loan, because they are risky to service in the first place. Now, I'll just tell you what exactly is the process or the problem which we are looking at. Of course, there's a first loss guarantee or the partial loss guarantee. It can be done. But where it will still be a problematic scenario is that what will you do when that asset loan goes bad? Unlike that of a vehicle loan financing, where a lender can possess that vehicle and sell it in the secondary market, in the rooftop solar system, if you go ahead and take the system and take the ownership of the system, warranty goes for a toss. The value of the system loses instantly the moment you try to disassemble it and reassemble it at some other agency. As a lender, there is very limited bandwidth to go ahead and do such kind of things. And what you require is a good enough platform, such kind of platform which can come and do this kind of a market-based service, which will have lenders as well as the EPC players who can create that kind of a market platform. Okay, this asset is available in a city, and you can quote whatever value you can provide. If a lender has to do it, the value would effectively be zero for the particular asset. To really be able to go through on the scale basis, you can't really depend on the collaterals. For a collateral-free loan, you really need a secondary market where this particular system can work out. Now, the moment I say this, if you look at the vehicle loan financing, when it got developed in India, lenders became the biggest resellers of the vehicles. The same thing can't happen for rooftop solar. It needs to have some specialized agencies who can do the dismantling and reassembly at some other point of time. And also provide some kind of comfort on the warranty, since the manufacturers will not be owning that warranty after it has been removed from the original place. This is where the risk capital plays a role. The moment a risk capital is put through, that risk capital has the agenda of developing the data points. The moment you have enough of these projects running around, you know, okay, these are the delinquencies rate. And even if I'm not able to recover it, I'll still may be able to make a business sense out of it. This is the biggest problem today. You don't have that kind of data. You don't have the actual delinquency rates, and you don't have the recovery potential. Devoid of that, market really lacks the ability to get the financing itself. These are the challenges which are hampering the MSME segment. Regarding the large projects, there is enough and more financing available, which can go under the OPEX model, provided the regulatory certainty and the other market scenarios evolve. And yes, Indian government is also pushing forward its foot on, they are putting their foot on the pedal to really accelerate the segment forward. It can really process ahead if regulatory certainty is provided. But for the MSME segment, there is a lot more to do before we can really say the market is picking up. Over to you, Jyoti.
Thank you, Mudit. Those are very valid concerns, I think, but let's hear the success cases now. And we have a representation from Mr. Ramesh from ORB Energy, who's, I think, 40% of the revenues of ORB Energy are coming from financing side of the business. So Mr. Ramesh, over to you. We would like to hear your experiences, your insights, and the reasons probably what makes ORB a success case here. Over to you, Mr. Ramesh. You are on mute, Mr. Ramesh.
Sorry. Yeah, so let me put a different perspective of things because I rather would like to say how it works rather than saying I think why it doesn't work is quite known to everyone. I think when you look at, and we basically only do SMEs, we don't do corporates, we just do SMEs. And in SME financing, one of the important things we realized is these SMEs are all used to working with banks. And for most of their assets, they have always gone to banks and borrowed on an EMI basis. So the first thing we did was we didn't look at a rate per unit. We went with an EMI model so that it is relative to the how the banks do it for them. The SMEs like ownership. They don't like a lease model. They like ownership. And when the asset is belonging to them or it belongs to them, then that is what they like. They like to see that, okay, 3 or 5 years tenure, and then it's theirs. And that's what they would like to hear. And so since we have been working for long in this segment and we understand, and we ourselves are an SME, we understand as to how an SME thinks on this aspect. And the financing, we have done close to about 38 megawatts on financing, 110 crores. And it so far has been pretty good because the most important aspect is the EMI is always lesser than the savings that they would get from solar. And it's always structured like that. And the SME owner always pays the electricity board. That's one thing which he does not do. He doesn't say that I won't pay to the electricity board, because for him, electricity is very important. And the same logic applies here. As long as he gets power from the system, he would pay. And it's our job to ensure that the system works. And so we went in, and the other thing which we noticed was the SMEs, obviously collateral is a big subject for them. They would like to keep it for their own businesses. So we went in with a non-collateralized loan. Interest rate is still a challenge. When we still talk about 12.5 or 13%, it's a challenge for them because they always would like to compare with the bank, which is today at around 8% or 8.5%. But then this is a non-collateralized loan. So it takes some selling to make them aware that a non-collateralized loan comes at a slightly higher interest. So the aspect of this is, it's also, the other thing is we don't look at any credit rating. We just go based on P&L and balance sheet. And so, take out credit rating from it because they may not have a chance to get a credit rating. So why look at credit rating at all? And we have found that it works pretty well as long as you understand the social structure in which these SMEs are built in. And it's a little bit of social financing. You should not look at it from a pure financing angle. You should look at it from a little bit of social financing, that a customer who borrows for this is getting power out of this, generally tends to pay. We have had pretty good, we have had one case which defaulted so far, and we manage, since we are integrated, we are backward integrated, we do our own sales, so we could use it and reuse that system. But otherwise, we have had no issues with it. The challenges, what we would say, is how to get low interest finance, and that's something which can accelerate this segment. If the banks are always banks are the biggest lenders for the SMEs, and they continue to be so. Even for us, continue to be so. Even though we do our own financing, the banks still form a critical part. But the banks are slow, and that's not going to change, because whenever a customer says I'll go to the bank, it will take him 2-3 months, and if you see the loss that he bore over the 2-3 months, it's bigger than the interest saving that he would have got. So from that angle, it makes sense. The issue is more, and we would, one of the things which hurts in borrowing funds and then lending it forward is when you go for international funds, it's the hedging risk. And hedging is a serious portion. And that's something which we would say, if rather than giving, I don't think default guarantees are required. What you need is more hedging guarantees, so that it can bring the cost of capital down. Yeah, that's all from my side.
Thank you, Ramesh, for listing down your success cases. I think ORB is focusing most toward the end customer side of a solution, quick turnaround time and other things, which makes the product interesting. But let's hear it from another big developer, which is being represented by Ms. Jignasa here from Fourth Partner Energy. Jignasa, what has been your experience with respect to financing trends? I think Fourth Partner has raised good amount of debt as well as equity in the past. So what we would like to hear from you, Jignasa? What has been your experience and what insights you would like to share?
Hi everybody, thanks. It was great to hear all the other panelists, especially, what ORB Energy is doing, it's something quite different. We, unlike them, focus completely on the C&I segment. And, our focus is completely on, rated clients. And one of the reasons is what Mudit was saying, because, the banks are looking at investable grade of takers. And since we go for, unlike an SME, when you're at CNI segment, you're looking at 15-25 years PPA. So it becomes a very natural extension that you look at the credit of the client and you look at how he survived over the last 20-25 years. Because to enter into a PPA of 25 years, that much of history for the client is very important. That is one of the key things that we as a partner look when we enter into an OPEX PPA, on-site PPA. As everybody knows, currently we are number one on the rooftop solar industry on the CNI side. We have almost 20% of market share and we have almost 300 megawatts operational. Now, what we think is how financing has moved over the last 2-3 years. It was very, very tough when we started in 17-18, except the SBI World Bank line. No other lenders were there, I saw in Vibhuti's PPT, a lot of private sector lenders, but Vibhuti, I'd like to tell you, the Kotak of the world still don't lend, So Canara Bank, Kotak Bank, even Industrial, they've done one-off, transactions with Cleanmax, etc. But they are not the ones who are actually coming out and doing a lot of, CNI rooftop. Two reasons why I see that is happening is, one is a lot of education of these vendors is needed. They do not, a lot of direct comparison happens between utility scale and rooftop, which becomes a big problem because here you're looking at an aggregation of 250 kilowatts to say 3-4 megawatts, and then a portfolio comes along. So a lot of banks, when they think about project financing, it is like a 2-3 month process of evaluation of the credit, of the project, timelines, and they get stumped when, a rooftop portfolio comes along, because you have to have a portfolio approach rather than a traditional project financing approach. So we still think that while financing has come and Fourth Partner has been able to tie up financing with SBI, we've used the GCF line of Tata Cleantech. We've closed 180 crores with them in May this year. So I think we are one of the largest borrowers from their GCF line. We have another $50 million line from BOFA, New York. So yes, we've got some innovative financing, in place, but it, for the smaller players, it becomes very, very difficult. And even for players like us, one thing which still seems, one thing which still happens is that it is more COD financing. It is more financing when the project is commissioned. So the under construction financing for rooftop is still lacking, because by the time we've signed the PPAs, we will have a portfolio. The banks would be able to evaluate 80-90% of our projects are already commissioned. And that's the reason, Jyoti, you would have seen that there was a lot of equity fundraising that has happened. Because unlike any other segment, on-site rooftop financing, equity has to come first and then only debt can follow. Because majority of the projects get built using equity. This is, I think, where the market needs to change, since the, overall industry has evolved. If we can have line, what we've done with BOFA, we have $50 million line over there. There are some, sort of PPA templates which can be negotiated, but certain clauses need to be there. There are some credit matrix we've discussed. Basis that the disbursement happens very quickly. So I think for financing to become more lucid, these are some of the innovations which need to come about. And also, more private lenders. Currently, it's, the World Bank, Tata Cleantech, they have these climate lines. Very few lenders are using their own balance sheet to be, doing this financing. So I think that needs to happen and the process needs to quicken. Then a lot of large and smaller rooftop players would have more accessibility to finance.
Thank you, Jignasa, for sharing your insights. We might have a few more follow-up questions with you. But let's hear it from the last panelist on the session today. Thank you for your patience, Ashutosh. But yes, I think you have heard what all the other panelists have spoken about, and we believe EFL is also the new, and I would say the new player who started tapping this MSME market. So what has been your take, and what do you want to, any insights you want to share based on your experience, Ashutosh? Over to you.
Thanks, Jyoti. I mean, you said thanks for being patient, but I was quite glad to listen to my fellow panelists. Some interesting insights there. I'll start by, as EFL, we are a MSME focused company. So from day one, our focus has been the MSME customer segment. So we are a machine financer, originally, and of course we have started rooftop solar financing almost 18 months back. But the learnings from being an MSME finance for so long have been carried forward into the rooftop solar financing as well. We actually had started rooftop solar financing in 2017. We did a few projects and we then stopped that product because people were not aware, MSMEs were not really aware about what is rooftop solar, what are the benefits, so on and so forth. Second, prices were quite high at that point in time. So it was in some sense prohibitive for the MSME to go for a rooftop solar financing. Now, fast forward 4 years or maybe 3.5 years, what we've seen is that the MSME segment per se, there's a lot of awareness as far as rooftop solar is concerned. So, when we go to a customer, you don't need to tell the MSME customer that, this is rooftop solar, this is how it works, and this is the benefits, right? So that's something that has been taken care of. And thanks to all the EPCs in this industry. The second thing is that they understand that this is like this is a tool which can help you, build profits in some way, right? Savings is equal to profits for these people. On the flip side, there are 2-3 issues which most MSMEs face. One is, especially in a situation where you have a pandemic like COVID, where they, what do you prioritize? Do you prioritize putting whatever money that you have in a rooftop solar? There's a small upfront money that anybody has to put in, even if there's financing available. Or should I use that money for a working capital or for an asset acquisition, right? So that's number one. Number two is in terms of the EPCs who are active in this, and I'm not talking about the ORB or the fourth partners of the world, right? These are very strong corporates, strong processes and systems and quality, panels and stuff like that. But there are a lot of these smaller EPCs who generally try and tend to deal with the MSME segment, right? So they really don't know whether this is the right EPC to go with. If I go with this EPC, will I get the right kind of quality panel, right kind of installation? Is it going to last for 20-25 years, as most people say? That's one more challenge, right? So these are some of the challenges that the MSMEs are currently facing. Of course, financing remains a challenge. As far as EFL is concerned, since I talked about it earlier, we are MSME focused. So some of the things that we have sort of replicated from our learning in the machine financing spaces, we don't take collateral for financing rooftop solar. So that's a big plus as far as the MSME is concerned. Second is speed, of course, because as Ramesh said earlier, and so did Jignasa, if you take 2 to 3 months to fund for an MSME, it's simply not going to work, right? So the speed is something which is very critical. The third thing is in terms of the credit rating. Most MSMEs, by their very nature, right, they will not lend towards being a credit rated entity. So what you really need to do is build competencies in terms of how do you assess the credit worthiness of an MSME, which is something that we have been able to do. So I think in the last 18 months or so, if not for the pandemic, I think the growth that we have seen in the rooftop solar finance portfolio for our company would have been double, is my guess. Of course, I think so far it has been so good. No delinquencies at all in the portfolio that we have. We're seeing a lot of traction, especially in the last 2 months going forward. There are a few challenges, of course, as an NBFC, and which is basically a challenge faced by the customer, right? So Ramesh alluded to the rate of interest, but if you're doing a collateral-free loan, then the rate of interest is higher. And my sense is that the soft financing arrangements that some of the larger lenders have in place, if they can be made available to some of the NBFCs who are active in this space, I think it is going to translate to a direct benefit to the customer, not so much to the NBFCs, because the spreads will remain the same. I borrow at X rate and I lend at Y rate. That spread is not going to change. But if that borrowing cost comes down, I can pass it on to the MSME segment. And one more thing is, I think Vibhuti referred it in her presentation, is about the stability of policy making, especially in the state government. Just to quote an example, I think Gujarat state government has changed their policies, and there's a lot of uncertainty in the market because of that. Many MSMEs who would have ideally maybe gone ahead in installing a rooftop solar have pulled back because of the uncertainty. So I think these are some of the things that they're taken care of. I think this segment is ready to grow. Awareness is not an issue. There are players like us and ORB and maybe a few more who are ready to do collateral free lending. But if these things can be taken care of, I think for the next 3 to 5 years, we can see a lot more MSMEs, adapt rooftop solar. Thanks, Jyoti.
Thank you, Ashutosh, for sharing your experience. We have few very interesting questions lined up. Ramesh, there is one very interesting, and I'm also quite intrigued by that question, which is, what is the impact of COVID-19 specifically? We are all aware that, MSME segment has been a big hit because of COVID-19 in their day-to-day, business cycle. So what is the impact on ORB's portfolio? We would like to know. Has there been an impact? If yes, how you have tackled that?
I would say the impact has been very minimal. I was also surprised after the second wave. I thought it would be more, but the impact has been very minimal. We have had about 4 cases where we had to reschedule. Otherwise, we have had no defaults from any of the customers.
That's interesting to know. In terms of, this is a follow-up question for you only, Mr. Ramesh. What has been your, outlook for next 1 or 2 years, specifically if we talk about only ORB's portfolio? You mentioned you have done about 37 to 38 megawatt till now. So what is the scale that you are looking at in next 1 to 2 years?
I think, rather than, I would look at it and say that the market is growing. We have seen a very good growth this year itself. I would say that maybe we should expect financing itself to give us close to about 150 to 200 megawatts in the next 1 or 2 years, which is a definite possibility given that awareness of solar is quite, most of the customers know what solar can bring to them. And the question is, in this industry, it's more about prioritization, especially with the SMEs, because SME owners have limited bandwidth and they don't have multiple people taking care of many things. It's one guy who takes care of everything. And so for him, bandwidth is a big issue. But once he knows that, this is something which can add to his bottom line, that's something which is starting to take some priority for him. And that, if you ask me, is the challenge. And then obviously this is a capital intensive product, so needs financing. And, he would look at it in 2 ways with us. One is finance is available. Second is he also covers his technology risk.
Great, thank you. Jignasa, I think follow-up question after hearing Ramesh's viewpoint. I wanted to know, over last 4-5 years, the market, I think the good CNI, good credit-worthy CNI customers, the market is going to be saturated. So how do you think Fourth Partner is planning your next wave of growth? If this market is saturated, also you are also looking to tap this MSME segment in near future? If yes, what could be the ways that you are looking at?
So yeah, Jyoti, to that, while the market is getting saturated, I think it is still very, very large. What we are doing is Fourth Partner as a company has, along with on-site, now we have off-site offering as well. We have almost 200 megawatt on open access side. And a lot of our existing clients, large clients, the AA, AAA, even the, big industry clients who are A, triple B plus, their energy needs are, in hundreds of megawatts. So a lot of our repeat clients on-site, we are taking them along on off-site. So that is one area where Fourth Partner is growing. Going forward, we are going to be 50% CNI on-site and 50% off-site. But yes, MSME has always interested us. And, we've always tried to, sort of, the EMI structure with Ramesh was speaking about, we've sort of looked at it, explored it, but where we find the biggest challenge is, the way we actually analyze our clients. That analyzing is mainly suited to a CNI climate. So client, we need to develop those capabilities, which even Ashutosh was saying, that it is not based on credit rating. There is a separate matrix by which you analyze an MSME client. It is more of social financing. You see where the MSME is, what kind of products he has, where he is in the segment in the industry. I think for an MSME evaluation, you even need to see what kind of family involvement is there in the business. So there are these small nuances which go beyond, your CRISIL ICRA credit rating. So, that is something, going forward, we would like to grow in that area. Currently, however, the CNI on-site, off-site is more than enough that we are doing, but it is a very interesting segment and we see a lot of growth on it. One thing that has to happen is shorter PPAs and better financing availability from their existing lenders. So we had a small discussion 2-3 years back with Tata Cleantech themselves. They were looking at a product where their current MSME clients could be tapped, and then a developer would, so there would be sort of a coalition between them and developers where the clients would be theirs and we would be doing the OPEX project. So there would be financing of their existing MSME clients. So I think a lot of existing banks need to do this because it can even come under priority sector lending, right? That's how the market can really grow. So those are, some of the things which can, how the MSME market can see growth.
Thank you, Jignasa, for sharing your views. Mudit, my next question is for you. You've heard from Ramesh from ORB Energy, as well as I think you are already in business with Fourth Partner Energy. So Mudit, what has been your take? I just want to, we understand all the valid concerns, but if you think this market has to grow, if I want you to, just list down maybe 2 or 3 things that will scale up growth in this segment, and how specific to financing I'm asking here.
Ultimately, it's not that the financing will grow on a standalone basis. It's basically a derivative of the market itself. Market needs to grow for financing to come in. Financing needs to come in for the market to grow. If you look at the last segment, as Jignasa just rightly mentioned, it's not going to be saturated anytime soon. It will still take some time. The market growth will still continue to come. But for the real explosive growth that you're talking about, MSMEs needs to partner. Now, MSME is challenging, whether it's the rooftop solar, whether it's any other segment. For MSME, the challenge remains the same. And what Ashutosh mentioned is very right. I mean, you really need to go beyond what's visible for that segment to pick up. Unfortunately, MSMEs are spread across the country. You need more of such social level analysis to go on. And that kind of thing would require a lot of support parameters from various other segments. The problem is the capital lies with the larger banks or the larger NBFCs. But the challenge is they are not really suited to understand what the social circle talks about. For MSMEs to grow on, collateral-free lending is a bare minimum must. That segment, once it opens, that would be the key point from which this market can really see the future, which everybody has been talking about for past 6-7 years. But we always keep short of that. That can only open up once MSMEs really participate.
Thank you, Mudit, for giving your opinion. I think there is one interesting question which probably Ashutosh, you can take up next, which is from Mr. Prasad. What technical qualifications do you look at when you decide on financing for the EPC or installer or OEM, and what size of project would you look at for considering financing?
We don't fund EPCs as such directly. We have actually it's sort of a byproduct, so to say, where we fund for working capital for EPCs, but that's not the main focus of our business. So we don't fund EPCs directly. Having said that, we do have certain norms in terms of what kind of installations we fund, right? And what we've done is what we've tried to do is figure out what kind of panels should be used in the project, what kind of inverters should be used in the project, and of course, the balance of systems, what are the safety measures being taken as far as the installation is concerned. So these are 3-4 things that we look in a project from a technical perspective when we're evaluating a project finance. But that's for the end customer. As I said, we don't fund directly to EPCs or large system integrators as such. On the financing side, of course, we look at typical financing parameters, like turnover and profitability. How good is the cash flow of the customer, what is the background, business model, who is behind the MSME, right? Because most of these SMEs are individual driven businesses, and that makes a big difference when you're lending money to that business. I hope I have been able to answer the question.
Yes, Ashutosh, thank you. So I think let me just put my last question, and I think these will be to the two developers on the panel today. Jignasa, how are you tackling this policy uncertainty environment? What impact it is having on your current business, and what are the measures that you think you can or are you adopting to tackle this policy uncertainty across states? And I have the same question, your views on the same question, Mr. Ramesh. Uh, Jignasa, probably you can answer first.
Yeah, so the policy flip-flops are always a problem. Both the developer and the lender, and in fact even the off-takers are edgy, right? But I think now some clarity has come about when they've reduced it from 1 megawatt to 500 kilowatt, net metering. How a fourth partner mitigates this risk is, whenever we see there is a state which is getting into a, sort of a policy, uncertainty, we try to for some time stay away from that market. We try to evaluate, see, that's the advantage of rooftop, right? Like in a very banking parlance, it's similar to a retail loan. It's distributed, it's all over India. So you can concentrate on other states. Luckily, rooftop market is developed in all the states. We are out of the 29 states. I think we are in almost 25 states in the country. We at least have one plant in 25 states in India. So that's one thing that we try to do. Another thing that has happened with us is over the last 2 years, our average size has gone up. So a lot of our plants are anyways not using net metering. So we are trying to sort of have a capacity for an off-taker based on the daytime, replacement of his own plant without needing support to, inject it in the grid. We have a lot of industrial clients who work 24 by 7. So, there is not going to be a need if you're just replacing part of their daytime consumption. So that is another, measure that we've taken. This policy uncertainty, but what it has done is, I think it's impacted the institutional sector a lot. Like we've consciously stayed away from a lot of educational institutes because that is where, partly, of course, COVID has also resulted into that. But there are vacations, there are weekends where you are dependent on net metering. So yes, if there is one ask we've been having for a lot of years, there needs to be a single policy across all these states. I mean, I think that would make lives of developers, lenders, and off-takers very easy. These are a few measures that we take.
Right, Jignasa. Mr. Ramesh, your viewpoint on this, how you are tackling specifically with MSMEs?
Jignasa has answered most of it. We look at it like this. We live in India, so policies, flip-flops will be there. It's not going to go away with us. So like she said, we are in about 12 or 13 states. So we see which state is not that good, and that state we will go slow. But then, obviously we have manpower in these states, so we will have to still see that we do something there. And there are now systems which are going up in size where net metering really doesn't matter. Most of our customers don't need net metering. That's how I look at it, because they are consuming most of the energy they generate. And they are not able to, on rooftop anyhow, they are not able to generate their full need. You need a off-site system for that. So I don't see that as a real big issue. Yes, it is an issue for, like Jignasa said, it's for educational institutions, but that segment has got its own set of other issues. So I don't think we should, we have learned to live with it. And I don't think that is a bigger concern for us as of now. Having said that, I would say that policy should be at least for 5 years so that there is some consistency, rather than this yearly switchovers and yearly changeovers, which makes it very difficult for everyone.
Any specific, impact that you have seen because of this recent Ministry of Power regulations on a limit to a 500 kilowatt system from 1 megawatt?
That is also funny. Some states have gone with 500, some states have stuck on to 10. There is a state like Karnataka which has gone up to 2 megawatts. So now, okay, so we understand that the central government is an advisory body and the states can take their own individual decisions. So, customers sometimes would wait, when they feel that But take a state like Tamil Nadu, it has never had a policy which has favored solar. They have kept on installing. It's one of those states which has done quite a lot of solar installation. I think at some point, people will look at what is the lowest cost of power. If solar gives them the lowest cost of power, they will go ahead and put it, and they will find their own ways how they will overcome the regulation.
Right, Ramesh. So with these remarks, I think I would want to close this session today. And I'm really glad to know that despite all the policy uncertainty, there is enough growth in the market that is expecting from the developers who are catering the good credit-worthy consumers as well as the MSME segment. And I think with the growth trend that Tata Cleantech and EFL has shown in last few years of your operations, the market looks quite upbeat. So undoubtedly, I think there is still huge potential to be tapped in this market. So thank you everyone for sharing your wonderful insights. Thank you for joining us for the session. Special thanks to IEEFA for supporting us in this webinar. The recording of the session will be available on our website shortly. Have a good day. Thank you.
Thank you.
Thank you, everyone.
Thank
Thank you.
you.
Thank you.